Hello everyone, welcome to IS Forex. I am African Rebel. This is where we guide traders from foundations to freedom. So for the sake of those of you still complaining about stop hunting and reason why your stop losses are being taken before your trade go to your TP, I'm going to break down in this video. I'm going to break down a trade I took last night, which I actually I'm going to talk about how to properly help yourself stay away from being stop hunted in the market. All right. So without wasting much of our time, please, if you are yet to subscribe to our channel, please don't forget to hit the subscribe button. If you like the video, remember to give us a thumbs up and also say your comments in the comment section. Let's get started. So this is volatility 10 index 1s, and this is the 5 minutes. As you all know, because I am a day trader and I don't like to hold my trade, longer, or I just like to take my trade within few hours of the day. Though this one I had to hold it overnight, but if you calculate it, it is not up to 24 hours. All right. So because I like to hold my trade few hours, I like to stay on the lower time frame, and I always tell you guys the lower time frame builds up the higher time frame. So you just need to try to shift your psychology from what you used to believe about the only focusing on the higher time frame, shift it to a lower time frame, and then you get to understand how we do it. All right. So if you want to know how we do trade properly in my community, you can look in link in description below to come for proper mentorship. All right. So when I met this trade in the morning, last night or yesterday evening, you can see on my screen when I executed the trade, right? So I met it somewhere here. Okay. I met it somewhere here, and immediately I saw this, I knew the market is going to buy. Why? Because I understand what is called, or what we are taught from Falcon. It is called mass psychology. I'm sure you all know when people or the masses feel like it is time to get in, and then the market does a little bit different thing so that they can engulf their stop losses before actually playing out into their direction. All right. So when I zoomed out this chart, I see that we are in a downtrend, because we're creating lows and lows and lower highs and lower highs. So I know we are in a downtrend, and then this was an impulse, and this was kind of an expanding type of correction because it is wide, having series of impulses and correction in it, right? So but my focal point wasn't there. My focal point was that I had this final impulse that created this low, and then I had the market interacting with this low. All right. Now, where is the mass psychology, and why do you guys get stopped out, or why does traders get stopped out of trade? It's because of the fact that we forget to cater, or we don't know how to cater for what is called liquidity. All right. And without liquidity, the market can move. The market has to take, because it's a zero sum, it has to take money from other traders to pay other traders. All right. So if you don't know how to wait for the market to take money first before you enter, it's going to take your money. This is how, or this is why you get stop hunted. You need to take your money to pay others. All right. So I had this low, and this low, which I call swing point. I had this, and then I had the market around this level. Now, where the first stop hunt happened, or where the mass psychology happened? Mass psychology is something from here. Look at this place. We have a pin bar there. So this is what most people will take as what market coming back to retest a particular zone. And you can see always whenever the market is trying to fool us, it always gives us a confirmation. You can see an engulfing candle there. So a lot of people will execute their trade right here after the engulfing candle closes, and then stop losses below, which you see it was taking. So the mass psychology is that the masses, the masses are known, or are used to taking trade at bounce off support and bounce off resistance. So this is support, the market bounce off. So if you took your trade here without understanding liquidity, and when the liquidity is supposed to be taken properly, you are definitely going to be in trouble. And this is when I saw this happen, and I saw that yes, I know people will take trade here, and then trade, and the market is here already. Normally, I don't trade at night. I trade in the morning, during the daytime. But immediately I saw what I've just explained to you guys, I knew that yes, the market had high potential of playing out, and I just decided to put in the money, and then let's see how it play out. And then I went to sleep. All right. I don't really mark out with the real line when the market has bypassed the structure. So we had this swing point, and what happened to it? The market came to it, and instead of going down, the market just went back inside it again. All right. And then in confluences with this, we know that a lot of people executed buys here, and their stop losses have been taken. So I know that yes, the buy is going to happen very well. Now this is where my pattern knowledge comes in. If you work with the Falcon, you should know that whenever you have the equal lows. You don't just take them as equal lows. You have to wait for a structure to occur. All right, you need to for patterns to form. And I always preach to you guys that the last pattern has the highest probability of playing out. The last uh, pattern you have, it is what has the highest probability of playing out. So if we look at this, we had this final impulse to the downside, like, and then we had one, we had this swing point, and then this swing point, and then finally the swing point we met the market. And I also tell to you guys rules of trend line, rules of patterns. Uh, rules of patterns. When you have an impulse and then you have corresponding swing points in the same direction of your impulse, it is clearly a reversal pattern. So this is a reversal pattern in confluence with the fact that it took mass psychology liquidity from here. We also saw a reversal pattern to the upside. So I know that yes, it is time for us to look for confirmations to execute our trade. So if you were to connect the trend line, we're going to have something like this: 1, 2, 3. All right, and you know the third touch also has the most impactful touch. So we had a lot of confluences. Number one confluence was what? The market interacting with this, creating mass psychology and taking people's stop losses. Number two, we have a running channel when the swing points are in the same direction of the impulse. Number three, we had a third touch on our trend line and then rejected. So this is confluence enough for me to know that the market is going to go in this direction. And then for proper entry, and you can see where the entry was, though actually I missed the first entry. It was supposed to be as tight as this level, but I missed it because, like I said, I don't trade at night. I just hopped on my MT5 and I saw the setup and then came on my trading view to analyze. So I wait for another entry and then I was able to execute my trade somewhere there. All right, so when I executed my trade there, we all know that whenever you execute a trade against a trend line, you need to wait for it to come to 90. So this was the first target, 90%. And after 90%, the next significant point was this. So this is my final target. All right, this is my final target. And as you can see on my screen, so the market hit our target around 6 a.m. All right. So this is how I was able to filter this trade using the trend line and then the swing point, and also my knowledge of liquidity to stay off being liquidated on the market or to stay away from being stop hunted. So if you want to get to know properly how we deal with the market in my community, look in the link in the description and come for proper mentorship. Thanks for watching.